also keeping a watch on the housing sector. Economists expect new and existing home sales fell in October as rising mortgage rates slowed purchases. Now, could this be another sign marking the end of the housing boom? Joining us to help answer that question is Bob Moulton. He's president of Americana Mortgage Group, and he joins us in studio on this Monday morning. Good morning, Bob.
Good morning, Carol.
So what are you expecting from the housing statistics today and tomorrow?
Well, today we're going to have existing home sales, and September was down from August, and I think October will be flat to September, maybe down slightly. Existing home sales are recorded once a house closes. New home sales, I think, will be down a little further simply because they're recorded once the contract is signed. That takes into consideration existing mortgage rates, which are at about a 2.5-year high right now.
So down, but on a historical basis, we're still at some pretty high levels.
We're at very high levels. I mean, 2 years ago, we sold about 5.6 million homes. This year, we're looking at about 7.2 million homes.
So I think another record year.
Another record year for 2005.
All right. So what does this mean? You know, we're starting to see accounts of maybe, you know, homes staying on the market longer, maybe sellers having to reduce their prices. Do you think we're seeing a bit of a slowdown here or cooling, at least in the housing market?
What we're seeing is like stickiness in the sales price. Sellers still want to get their price for the house. Home buyers are getting a little concerned about rising energy prices, rising mortgage rates. They've been hearing everything about the bubble in the housing market. So there's still a little bit of a spread in between what the seller's looking for and what the home buyer is looking to spend. So inventories are up, and we're going to have to ride it out a little bit through the cold months.
Do you see any signs that it's becoming more of a buyer's market at this point? I mean, sellers may be holding out for those prices, but they may not get them.
Well, with the inventory going up, we should see it turning into a buyer's market, but right now with a growing population and a strong jobs market, we're still seeing a seller's market. It might turn around in the spring of next year.
Interesting. I mean, so let's talk about next year. What are you expecting?
Probably down slightly, maybe down about 3% from where we are this year.
Still not bad.
Still not bad. Still a great, time for homeowners. There's still a lot of equity. Homeowners are tapping into their houses with home equity lines of credit and refinancing.
But what about, though, those rising interest rates? We've got, what, the 30-year above 6%. When does that really start to have a pretty significant impact in terms of housing?
We're within 1% of the 40-year low. We're at a 2.5-year high right now. Rates are relatively attractive. Historically, rates are great. I mean, if you look at the early 1980s, we were at 16, 17%.
So when do those rising interest rates, though, start to have an impact?
I think the 7.5% number is a psychological threshold and might have a negative effect on the housing market. However, when that does happen, ARM products start to become a lot more popular, and we've seen the growth of interest-only products this year, which enables a homeowner to stretch their buying power by 20%.
Now, we've had, Bob, some really hot markets on the coast, certainly here in the Northeast and certainly on the West Coast. Some other markets in the middle, not so much. But I'm curious, what markets do you think could be potentially very vulnerable as these rates tick higher?
In the coastal markets, particularly down in the South and in Nevada, where we've had a lot of new construction and home prices increasing at a faster rate than other places in the country, those areas are probably more vulnerable than places such as the Northeast or the West Coast, where you have a stronger population.
Are we seeing housing prices top, in your view?
We always ask that question. They might dip a little bit, but over time, I think they'll still continue to grow as the population continues to grow.
So even if in some cases, in some markets, housing prices maybe drop by 10, 20%, many of these homeowners have made 30, 40% over the last few years. So kind of so what? And you're saying it's going to continue to go up?
They can absorb the loss. I mean, most homeowners have about 30% equity in their house.
What's the biggest risk to the housing market at this point? If you're saying the market's been pretty okay with these rising interest rates, at least at this point, what's the biggest risk?
I think energy prices.
Energy prices.
I think energy prices are going to have an effect in the cold areas, not so much in the South, but in the cold areas. If they continue to grow, that'll have a negative effect on the housing prices.
At least for the next few months.
Exactly.
All right, going to leave it there. Bob, we appreciate your time this morning.
Thanks, Carol.
You bet. Bob Moulton there, president of Americana Mortgage Group.